Next up in our interviews today at the SIAA conference for Tandem Securities, we have Jonathon Higgins, the Head of Research, Managing Director and Co-founder of Unified Capital Partners, or UCP as the market knows. Jono, thanks for your time today. Can you tell us a bit about your background and how UCP came to be?
Yeah, thanks very much for the time today and the opportunity to sort of present and have the discussion. So, look, Unified Capital Partners, UCP, as it's starting to become affectionately known, we're a boutique sort of broking-like service that operates underneath the Tandem Securities and third-party platform banner. Look, originally we were a breakaway firm outside of a larger stockbroking firm. There was a team of originally of 11 of us that started sort of mid last year.
Yeah.
And we had a bespoke sort of high conviction institutional broking service. We deal with a range of sort of emerging companies on the ASX, as well as a number of leading institutional fund managers. And look, we felt like we really wanted to sort of shift to an independent way of undertaking what we're doing. So we made the shift last year. We created the business mid last year, and lo and behold, 9, 10, 12, 11 months later, however long it's been, we're up and running and trading, and it's been a great experience. My background myself, look, I have a civil engineering background before getting,
bit of a jump for you.
Exactly. Before getting into commerce and starting to do a few things there. I was originally at Bell Financial Group in my early stages.
Welcome to the family.
Yeah, which is the head group of your group, obviously.
Tandem,
Of Tandem, before moving across to Shaw and Partners and doing what I'm doing now and really enjoying it.
Absolutely. Now, UCP has their own AFSL. It is one of the largest independent sales trading desks in Australia. What factors are you seeing that is really influencing sales trading desks now, and what are you looking for to run your business, really?
Yeah, look, it's a great question. I think that broking is one of those industries that at a high level is probably in almost a little bit of structural decline at the the highest level. Trading volumes are remaining high, but margins are coming down, and we really are of the view that a bespoke service is necessary, and a service that's really speaks towards your client's needs. So, when we talk towards being small and micro cap sort of specialists, or being in a particular sector or across sort of particular coverages, that's what we really see our clients as needing. And we've actually found, since shifting across from a larger banner group to ourselves, that the support from clients has been overwhelmingly positive, and we've actually picked up more clients than what we had previously. So that's been a great dynamic playing out for us.
Now, when you were looking for a wholesale trading partner, what were you and the leadership team at UCP looking for, and that really drew you to Tandem Securities?
Yeah, look, it's a great question. Look, I think, in terms of the offerings that are in the market, there's only a small number of offerings. Most of those offerings, I think, don't have a bespoke type of service. And in particular, they don't have a service that sort of allows you to be, I think, probably comfortable with your counterparty, like what we are with Tandem and TPP. So what we were looking for is we were looking for a counterparty that had a great balance sheet, that had great operational support. And what we get out of that service on the institutional side of things is that we get a service where we get all the clearing and settlement done, everything from daily trading through to equity capital market transactions. And we're also looking for somebody to manage orders and do that type of thing. So we had DTRs. Yeah, and there's a lot of optionality around that. So I actually think it's, from a financial perspective, it was one of those things where it's very hard to compete with the offering that you have.
Yeah.
But also strategically allows us to keep our headcount low and give best execution and a number of different other things.
Now, you do specialise at UCP in advice, bespoke advice, research and sales activities. What are some of the companies in your coverage, and what draws you? What do you look for when you have structural growth companies in your portfolio?
Yeah, look, so like what you said, look, we look towards structural growth. We typically need a thematic. We do multi sort of sector disciplines, but we do specialise in a particular thematic from now and again. So what we have been known for from time to time is things like fintech. We've done the buy now pay later from a very early stage. That's becoming topical once again. But also things like electrification, renewables, specialist services. So look, we like to see a 3 to 5 year growth trajectory. We like to see a good board and management team. We like to see them highly incentivized, and as a result, we think you get better outcomes over the longer term, which is borne up for us over the last sort of 7 to 8 years as we've been together for a group. And in the last 12 months, I think the average return under coverage for us is something like 45 or 50%. So in a good market, it's really sort of going well for us at this stage.
That's huge, and especially in such a volatile market environment. Now, speaking of markets, what's your view on the markets right now, and where do you think they're headed in FY25?
Yeah, look, I think it's going to be a two-speed set of markets. I think at the high level, the index is pretty expensive. I think some of the larger companies have had a really good rally. They're trading at elevated multiples in the context of a high inflationary environment. So you probably want to be a little bit cautious of some of these types of businesses that have got some economic exposure. I think the banks and these types of things.
Yeah.
But what I would say is underneath that, small cap equities we're overwhelmingly positive on. They're trading at a relative discount of 40 to 50% to large caps.
Yeah.
That's the highest level they've been at in 20 years. It's been predominantly as a result of liquidity. They have a greater growth profile. So we still remain bullish on the smaller end of the market. I think the larger end of the market, you have to be aware we are late cycle. The reality is that the reserve banks around the world are trying to slow things. We will see the budget out this evening.
Yeah, I'm really looking forward to that.
So, maybe we see a little bit of control on the spending, unlike what we may otherwise see. And as a result, look, larger companies are related to economic growth, and economic growth slowing. Earnings drive share prices, and earnings are probably broadly going to be slowing. So I think just, be cautious in what you do. You shouldn't be negative. I think there's room to be optimistic around the globe. But, I think be very careful in what you invest in would be my advice.
Johnny Higgins, thank you so much for your time today. And we love partnering with you at Tandem Securities.
Thanks very much.